Doesn't it kind of feel like we just go from crisis to crisis to crisis to crisis, keeping everybody off balance? And the dollar has really enjoyed massive benefits by being the world reserve currency because it created an artificial market for dollars.
In this video, Lynette Zang discusses the continuous financial crises and the fragility of fiat currencies, emphasizing the importance of owning physical gold and silver. Zhang also highlights the potential move towards central bank digital currencies and the risks of relying on government-controlled money.
But no currency has ever withstood the test of time in as far as the world, well, actually any fiat currency, any government-based currency. And this time is not any different. I think what's interesting is that things always go really slow until they go fast. And so the time to be prepared is well before that. But it was already in 2002 where the Federal Reserve started buying back U.S. government treasury debt. So that was already a period where we were not attracting enough foreign investors of our debt. We had to have the Federal Reserve step in. But did anybody talk about that? Heck no, because they don't want you to know. And so it makes me nervous when there's any topic that, frankly, they're not really talking about. But for people in the U.S., what that means is all of those excess dollars, especially with Saudi Arabia saying, hey, we'll accept any currencies for our oil. Well, we retained that status because of the petrodollar, where countries had to use dollars to buy oil. As that shifts, though, they don't have to. So the U.S. will pay for that privilege in a rather big way when all those dollars start to come home. And, you know, if they're trying to tell us that inflation is cooling off, yeah, I think that headline inflation is because oil dropped from 120 to 80 something. However, that's not going to be maintained. And I think that you will definitely see a ratcheting up of inflation. Plus, we haven't even felt the impact on a global basis, let alone on a local basis, of all of the central bank tightening, because it takes a certain period of time, usually 12 to 18 months, to work through the system before they can see if they got what they wanted. And so we're not there yet. And I have a really sneaking feeling that, and sinking feeling as well, that when the impact of the choices that the global central bankers have made actually impacts the global economy, well, Wall Street's definitely going to be singing a very different tune. But, you know, I think it's going to exacerbate the retirement crisis that we're in the middle of, that people don't realize. I think a lot of things are going to come up that people right now don't see. You know, everybody always assumes that central bankers and governments want this to just keep going on status quo. But when you look at the value, the purchasing power value of currencies, and the fact that, you know, interest rates were anchored forever at zero after the 2008 financial crisis, which I still maintain is when the system died. Maybe they don't really want it to be status quo, right? Maybe they want to push us and what they would call nudge us into a crisis so that they can execute the next part of their strategy, which is taking us into a full surveillance central bank digital currency. And they don't understand inflation. They admitted it. They don't understand it. Yay. That's what's guiding us through this mess. Lagarde said it. Powell said it. You know, I mean, yeah, they created this monster, and this monster will unfortunately eat everybody alive. I keep going back to that because so many of the moves that I see these central bankers and these governments make look like they are shifting into the next collapse. And even for Powell to say, well, all of that money creation didn't create inflation. Yeah, it did. It created real estate, stock, and bond bubbles. That's really what all of this is about, because our whole system is based on the ability to print more money and create more debt. And so, we've been having liquidity issues, particularly the one that's scariest, really, are issues around treasury bonds since 2015. But even more troubling is that the global yield curve has inverted. And that's the first time that since they've been tracking it, that has ever happened.
Lynette Zang highlights the vulnerabilities of fiat currencies, particularly the US dollar, noting the dollar's benefits as the world's reserve currency, but its inevitable decline. She points to the Federal Reserve's debt buybacks since 2002 as signs of instability and warns about the repercussions of Saudi Arabia accepting other currencies for oil. Zhang argues that current inflation trends are misleading and that central banks may be pushing towards a crisis to introduce a central bank digital currency. She emphasizes holding physical gold and silver to protect against fiat currency collapse, asserting they are the only financial assets free from counterparty risk.
So even back during the Depression in the 30s, honestly, it was a global depression, and we weren't so interconnected as we are now. So if we had a global depression, what does that mean for coming up? This is going to be a complete change. I mean, it really is so simple. This is the end of this current fiat money experiment based upon debt. They have to burn off this debt, and so hyperinflation is the way that evolved and advanced economies settle that debt in currencies that have virtually no value. And, that's true with all currencies. That's why you've got to have physical gold and physical silver. Because governments, what they can do, and we just saw this with the Lebanese pound, right? They suppress the price of gold because gold is good money. So a rising gold price is an indication of a failing currency. So it's kind of like a spring that you hold in your hand. And then when you remove your hand, the spring shoots in a direction. I think it was up over 1,500% overnight in that first overnight revaluation in the Lebanese pound. So don't be fooled by the prices that Wall Street is showing you. Those are the nominal prices and do not reflect the true value. They merely reflect the wishes and the whims of those that are in power and wanting to stay in power and they're accumulating it. I mean, look at the drawdown on the COMEX and the LBMA. That's big, smart money. Look at the fact that central banks are buying more gold than 1967, which was when we were transitioning into the new system. And people will refer back to the 60s, the 70s, the 80s, the 30s, the 40s. And they never take that next step. What was happening then? We were transitioning into new monetary systems. So you can stay vulnerable. That's your choice. But personally, I don't own any fiat money products more than some cash that I got to have because that's your first line of defense. But other than that, why would I? Because I know the truth. This is what I own: gold and silver, physical and in my possession, that runs no counterparty risk. Biz says only financial asset that runs no counterparty risk. Everything else is credit. It's all debt and it's all counterparty risk.
Thank you for tuning in. Today, Lynette Zang shed light on the volatile financial landscape and the enduring value of gold and silver. Her insights emphasize the need to prepare for instability by investing in tangible assets.